The ETFs, 70k, Solana season, the memes, pump.fun, Trump fun, yada yada yada. Look, we all know the biggest stories in crypto this year. They're pretty much all you hear about. But that's why you have to pay special attention to videos like this one, the ones with the crypto facts and figures that don't make it into the headlines. Today, we're unpacking a new report about the state of crypto adoption. It raises some important questions about who's in the crypto market, who's out, who's coming back, and who might have left for good. This is a video you've got to watch until the end. The report we have for you today is the 2024 Global State of Crypto report from Gemini, the crypto exchange founded by the Winklevoss twins. Now, notably, this is the first State of Crypto report from Gemini in 2.5 years. The previous edition came out at a rather strange time. It was April 2022, 1 month before the collapse of Terra Luna and the chain of disasters that followed, culminating with the implosion of FTX that November. In the 5 months following Gemini's last report, the total crypto market cap fell by $1.4 trillion. It was the definition of so over. Thankfully, we made it out of crypto winter alive, and BTC made a new all-time high. However, the total crypto market cap still hasn't. And at the time of making this video, it's actually back below where it was in April 2022. Now, it was probably for the best that Gemini didn't bother making a report last year because crypto was looking a little rough around the edges. But now, 29 months on from that last report, Gemini has skipped the bad parts and returned with a new edition. So, what's changed? Well, for one thing, the survey that the report is based on has downsized massively, by a factor of 5 to be exact. In 2022, Gemini commissioned a survey of nearly 30,000 people in 20 countries. This time, it was just 6,000 people in 5 countries. Now, it's tempting to read something into this. Does it tell us something about the state of crypto, or just Gemini? Maybe it's both. Possibly neither. But one thing is for certain. Gemini has got the word global doing some real heavy lifting this time around. That's because this year, the countries surveyed were the US, UK, France, Singapore, and Turkey. However, Turkey is excluded from the report's main findings and given just a few words at the end. This means that Gemini's global state of crypto covers just 4 out of 195 countries. Something to bear in mind. We also don't know how the 6,000 respondents were distributed throughout each country. However, the report tells us that they were a random sample representative of the consumer population. So, we can look forward to some insight into the world beyond our own bubble.
Hey man, hey, what do you do for a living?
Me? I'm a crypto YouTuber. Yeah, it's pretty fun job actually. See ya.
What about you? What do you do for a living?
Oh, me, man. I checked the Coinbureau deals page. It's got sign-up bonuses of up to $100,000 and trading fee discounts, but I mean huge trading fee discounts, and exclusive altcoin alpha in their subscription service. Check it out.
So the report begins with findings about how crypto ownership has changed since the last edition. Interestingly, the numbers today are pretty similar to what they were pre-crypto winter. In the UK, 18% of respondents reported owning crypto in both 2022 and 2024. In the US, ownership grew 1% up to 21%. France saw a 2% uptick to 18%. Singapore saw the biggest change, but unfortunately in the wrong direction. Ownership fell from 30% to 26%. The report also provides numbers on past ownership and non-ownership. Non-ownership here means someone who has never owned crypto, by the way. Now, in France, the UK and the US, the number of past owners grew by 4%, 6% and 9% respectively, indicating that a significant number of retail investors did leave crypto altogether, particularly in the United States. In light of these numbers, it's encouraging that overall ownership levels remain stable and even slightly increased from 2022 to 2024. In other words, leavers were more than made up for by new adopters, with Singapore being an exception. Obviously, we want to see crypto adoption increasing faster, but you have to remember that 2022 was an apocalyptic year for the industry. We're just glad that crypto ownership is mostly back to pre-apocalypse levels. And in France, the US and the UK, the level of non-ownership has fallen to an average of 67%. This means that 1 in 3 people has now dabbled in crypto at some point. This is a lot, but we still have a huge untapped population to onboard. Plus, we have past owners who may well FOMO back in once the market starts heating up again, probably when BTC touches 100k for the first time. Now, speaking of past crypto owners, this brings us to the report's next findings. These concern when leavers sold off their holdings and left crypto. In each of the 4 countries surveyed, between 41% and 49% of past owners sold off their crypto more than 1 year ago. For reference, the survey was taken in May to June 2024, so this means that they sold no later than June 2023. No doubt, many of this cohort will have left at some point during the crypto winter of 2022. The second largest group sold their crypto between 6 months and 1 year ago, meaning that they sold sometime in the latter half of 2023. This group made up between 26% and 35% of past owners. When you put these two groups together, we can see that around 3/4 of past owners left crypto more than 6 months ago. This leaves us with 2 more groups. The first is those who sold their crypto in the past 6 months, meaning they sold in Q1 or Q2 2024. So basically the sell in May and go away gigabrains. This savvy group made up between 10 and 17% of past owners. Now the last group is a curious one. It's just labelled other, and it made up between 8 and 13% of all past holders. Now, hold on a second. If the question was, when did you sell your crypto holdings? And the first 3 responses are time ranges that cover, let's see, all of history, then what does other mean? Well, we think there are 2 main groups who would respond to other. The first is people who watched their crypto investment go to zero, and so they became effectively past owners without actually having sold anything. The second is people who became past owners because they lost their crypto without having sold it. Think scams, lost private keys, holding crypto on an exchange that suddenly imploded, all of our worst nightmares. This is just speculation, but it's sad to think that around 10% of past owners may have had experiences as bad as these. Now, speaking of bad experiences, there's another interesting tidbit here. It's the percentage of past holders who sold off their holdings because they lost money. On the higher end, 35% of US respondents and 30% of Singaporean respondents said that this is why they sold. Apparently, the Brits and French fared a little better. In both cases, 26% said they left crypto because they lost money. And, okay, that's the nature of investing. Some win and some lose. But what's more interesting is the implication here. On average, 71% of past crypto holders sold out of crypto for reasons other than losing money. So how should we interpret this? I mean, if they were making money and still left crypto, isn't that kind of worse? Like they were in profit but just didn't like us? Was it the NFTs? No? Guys, come on, just give us one more chance. I promise ETH gas fees will never hurt you again. Please? Well, I guess we'll never know because the report doesn't tell us why this 71% sold their crypto and never came back. If it wasn't losing money, what do you think the reason was? Drop your hottest takes in the comments. We'd love to see what you guys think of this one. Well, whatever it was, it looks like we won't actually have to grovel. That's because, according to the report, more than 70% of past owners are planning on coming back anyway. In the US and the UK, the FOMO is especially strong because the number there was 77%. Although we should point out that these numbers combine 2 different responses, likely and somewhat likely to buy crypto in the next year. Around half of past owners reported being somewhat likely to buy, while around a quarter said they were likely to do so. As such, the report is stretching it a little bit when they say more than 70% of past owners said they are likely to buy cryptocurrency in the next year. If we're being honest, half of them just picked the middle option, which sounds a bit more like they're on the fence. But, well, whatever. Somewhat likely, we'll take what we can get. Now, we can't help wonder why the report shows us data about past owners but not non-owners. Once again, non-owners, people who have never touched crypto, were around 67% of all respondents across the 4 countries. Meanwhile, the past owners group was just 14%. So shouldn't we also take an interest in how likely this 67% is to buy into crypto? Surely the survey would have asked them too. And surely if a significant number said likely or somewhat likely, Gemini would want to tell us about it. Maybe those numbers weren't so bullish. I don't know, don't shoot me, I'm just asking questions. All right, next finding. The survey asked current crypto holders about how they are using crypto and gave them 3 options: hodling as a long-term investment, actively trading for profits, and buying specifically to hedge against inflation. Now, these aren't mutually exclusive categories, so don't go crunching the numbers on us. Overall, 65% are hodling crypto for a long-term investment, 45% are actively trading, and 38% are buying crypto as a hedge against inflation. French respondents were least likely to be crypto traders, with just 34% saying they were actively buying and selling, compared to 46% in the US, UK, and Singapore. Meanwhile, Singaporean and French respondents were most likely to hold crypto as a hedge against inflation, at 41% and 42%, compared to 34% in the US and UK. This is curious because inflation in the US and UK has been significantly higher than it has been in France and Singapore, so these numbers should really be the opposite. In the UK, inflation peaked in Q4 2022 at 11.1%. In France, it peaked in Q1 2023 at 6.3%. My fellow Brits, what are you doing? All you had to do was buy and hold BTC. The anti-inflation juice is right here if you ever feel like drinking it. Okay, next, the survey asked respondents how confident they were in a series of 5 statements. We'll break down the highlights, but first, do you notice something here? Once again, we're shown responses from current crypto owners and previous crypto owners, but not non-owners. Did Gemini not ask this group? Or are they just sitting on some hairy numbers? Either way, if we care about onboarding new people into crypto, it would be handy to have more data on their opinions, not less. Anyway, the first statement was, quote, "The price of BTC and ETH will continue to rise over the next 5 years." Presumably, this means BTC and ETH will be higher 5 years from now, and not that they will literally continue rising for the next 5 years straight, because that's just silly. The results were pretty surprising though. Brits were the most pessimistic, with just 56% of current crypto owners saying they were confident about this. French crypto owners were the most bullish, with 70% being confident. In the US, it was 64%, and in Singapore, 60%. So, hold on, let me get this straight. Almost half of all British crypto holders aren't confident that BTC and ETH will be higher 5 years from now. Now that is a hot take. The year is 2029, BTC is still fighting resistance at 60k? Personally, I just can't see it. But then again, this question does lump together BTC and ETH. These are 2 very different assets. If you ask the same question about BTC and ETH separately, people might answer differently. Do you know what? ETH is having a hard enough time as it is, so let's not pile on. So, the second statement read, quote, "There's more reason now to be confident about the future than before the crypto winter of 2022. Presumably, this means the future of crypto specifically. But listen to the last part one more time. It says before the crypto winter. So, all the bad stuff that happened in 2022, forget it. We're talking about how respondents felt before any of that happened versus how they feel now. Now remember, in Q1 2022, we'd fallen from the crazy heights of 2021, but the total crypto market cap was still above where it is today. Now the responses from past owners were most interesting to us. Overall, just 28% of them said that they felt more confident about the future now. In other words, almost 3/4 of past crypto owners are more bearish now than they were in early 2022. On the one hand, this is not shocking because so many people got wrecked in the months that followed. This likely left them thinking that crypto is a scam and it's going to zero. On the other hand, it's concerning because 2022 was 2 years ago already, and 2024 is supposed to be a huge year for crypto. We got the ETFs, BTC made a new all-time high. People were expecting a Fed rate cut all year, and we duly got 50 basis points in mid-September. Sure, Q2 and Q3 were rough for altcoins, but on higher timeframes, 2024 is absolutely a bull market. And despite all of this, 3/4 of past crypto owners are feeling worse about the prospects for crypto than they were in early 2022. Then again, remember that 70% of past owners also said they were likely or somewhat likely to buy crypto in the next year. Altogether then, it's a messy picture and it's hard to know what to make of it. Now, next up, respondents were asked if they were confident that, quote, more government oversight of the crypto industry would be positive because it will protect consumers from bad actors. On average, around half of crypto owners said yes, while a little over a third of past owners said the same. It's interesting to see that current holders are more optimistic about regulation. So why are past owners more skeptical? Maybe this is the voice of the people who got burned so badly that they think crypto villains are just unstoppable. That's just a guess though, let us know what you think in the comments. And the survey then turns to crypto payments. This is a big one. It's encouraging to see that almost 2/3 of current crypto owner respondents in the US, UK and France are confident that, quote, within the next decade, many companies will accept Bitcoin, Ether or stablecoins as a form of payment. Among previous owners, the number was closer to a third, but hey, you can't expect them to be more optimistic about crypto payments, can you? I can smell the disbelief already. Now, Singaporeans weren't so confident. Just half of current crypto owners and a quarter of previous owners in Singapore thought that crypto payments will be introduced. Now, this is probably a symptom of local regulation. The report later shows us how regulation is perceived as a barrier to investing in crypto more in Singapore than any other country in the survey. The percentage of Singaporean respondents who cited regulatory concerns as a barrier jumped up from 38% in 2022 to 49% in 2024. As with many countries, crypto regulation is a work in progress in Singapore. Hopefully, it will settle somewhere that doesn't stifle adoption. Next, the report turns to the upcoming US presidential elections. Crypto has been popping up left and right in this year's race for the White House, and just how much of an impact the crypto vote will make has become a hot topic. So hot that we made a whole video about it, in fact. And if you want to find out more, check it out after this one. As for Gemini, it found that 3/4 of US crypto holders plan to consider a candidate's stance on crypto when they vote for their next president. 37% felt more strongly, saying that crypto would have a significant impact on their voting decision. And the last highlight we'll bring you from this report is maybe the most important. It's a serious question for all of us, but one that mostly seems to get asked by no-coiners. Here's the deal. The proportion of crypto owners who are women has now fallen below a third. It's a little higher in France at 35%, but in the US, it's well on its way to a quarter, currently at 28%. In every country in the survey, male dominance is smashing new all-time highs. And it's rallying like crazy in Singapore, where it went from 46% in 2022 to 69% in 2024. My dudes, this is not good news for our portfolios. Women are like half the planet. We literally need them if we want our bags to pump. Anyway, this brings me to the big question, and that's what all of this means for your crypto portfolio. The answer depends on your perspective. Seeing all this bearish data might make you think, man, Peter Schiff was right. I should have sold all my crypto, bought physical gold, and moved to Puerto Rico. Believe it or not, but I hope this is the case. Why? Because if everyone and their mum is bearish on crypto, despite it seeing solid gains over the last year, then it means that the crypto bull market has barely started. Don't tell me you've forgotten how your relatives asked you about crypto in 2021. In retrospect, those uncomfortable questions about Cardano and Dogecoin would have marked the top for your entire crypto portfolio. The fact that these people are now spitting on the ground when you mention crypto around them should be one giant, slimy, contrarian indicator. Sorry for the imagery. Now, from our perspective, the most important piece of data discovered by Gemini is that 70% of past crypto owners are planning on unleashing their inner degen over the next year. Even though only 14% of those surveyed were past owners, that's still a lot when you actually crunch the numbers. The combined population of the US, UK, France, Singapore and Turkey totals almost 600 million people. Assuming the good folks at Gemini took a truly representative sample of the population, this means we've got 84 million past crypto holders, almost 60 million of whom plan to FOMO back in. And let's be real, that number is going to be much higher when everyone else and their mum is suddenly getting rich on whatever pump and dump the crypto cartels come up with next. You can rest assured that we'll all be scrambling to get a cut of the action then. Except the ladies, apparently. And that is all for today's video, folks, so smash the like if you don't want to see male dominance break 75%. I'm telling you, that would be max pain. If you haven't already, go ahead and subscribe and jingle that bell so you never miss another upload. As always, thank you for watching, and I'll see you next time. This is Guy, signing off.